It was the scariest financial decisions we've ever made. And a lot of people were just telling us, you're wrong, you should never do this, you're crazy. And if you weren't crazy, then you're not doing it right.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Welcome to today's show on Wealth Strategy Secrets. Today we're joined by Andrea Barnes on the 10X Investor Spotlight. Andrea is a seasoned real estate investor with a thriving portfolio. Alongside her husband, Kevin, Andrea manages a multi-million-dollar portfolio that includes single-family homes, multifamily projects, and various other syndications. But Andrea's success doesn't stop there. Prior to her real estate journey, she spent over 3 decades making a difference in the nonprofit and corporate philanthropy world. Her passion for helping others has led her to raise over $50 million for worthy causes. Beyond her impressive achievements, Andrea cherishes her family life. With over 40 years of marriage, she and Kevin enjoy the blessings of 2 daughters and 4 grandchildren. Andrea, welcome to the show.
Oh, I'm so happy to be here. Thank you for the invitation.
Yeah, really excited to have you on, Andrea, and share your journey with the listeners. It's been quite a journey, and I just love that you're so fascinated and motivated around the topic of wealth building, and you've looked under lots of different rocks, gathered lots of different resources, and really come a long way in your journey, and I think people are going to get a lot of value from that. So why don't we start off the conversation and, tell us a little bit about your background and how you got interested in, your wealth building journey.
Oh, well, thank you for this opportunity. So I think I actually have a background that a lot of people have. I grew up middle class. My husband grew up middle class. And in fact, I probably grew up a little with fewer financial resources. My mom raised 5 children by herself in the 60s. And so financially, we didn't have almost anything, but she was a wonderful mother and we lived very richly that way. And somehow she instilled in us the work ethic. If we wanted anything, we had to be really scrappy in order to get it. So I became independent fairly early in terms of being a financial person. I had my first job at 14 years old, and all of us went to college, and it all put us in good stead. I started working in the nonprofit field, and I actually had a 35-year career as a nonprofit executive. And my husband was a manufacturing engineer, so we both were everyday W-2 income people. And being in the nonprofit field, there really aren't a lot of opportunities to save money. Only 2 of my jobs actually had a 401k plan. And so when I was in those 2 jobs, I saved diligently, but that was only a certain amount of time in my career. And so back in, but I saved and it grew. And, but in 2008, just before I turned 50, the stock market crashed in the real estate crash. And I lost a full 1/3 of my income, not my income, but my savings from in my 401k plan. So it was devastating. And I was really, really disillusioned with the stock market. And so it just so happens that my niece and nephew, newly minted with an MBA, young, came over to my house for dinner, and they just said that they had been investing in single family homes and that they were getting ready to invest in their 3rd single family home and were looking for a money partner. And after they left, I just looked at my husband and I said, well, maybe we could be a money partner. That wouldn't be that hard for us to do. And so my nephew ended up introducing me to a group that coached and helped people transact real estate. And that profoundly changed our lives. So at the age of 50, instead of investing as a money partner in my nephew's one house, we ended up going all in. We had gotten a game plan that sort of could demonstrate what single family homes could do if we sort of reallocated our money. And so I converted what was left of my 401k. We took out a loan against our mortgage. I'm not saying this is what everybody's path should be, but this is what we ended up doing. It was the scariest financial decisions we've ever made. And a lot of people were just telling us, you're wrong, you should never do this, you're crazy. And if you weren't crazy, then you're not doing it right. That's the kind of advice that we got. But we ended up buying 6 houses. And it just turns out that with my background, being a nonprofit, there's not very many people that work there. And so you get to be a jack of all trades. I was raising money, I was developing websites, doing events, managing boards of trustees, et cetera. So I had a wide range of strategic planning and program implementation. So it turns out I just had a knack for being able to project manage my houses. And with the help of this organization that was coaching us, we were able to grow our portfolio from the original 6 to a total of 18 within 10 years. And we did that largely through, a sale here or there. And then we did 1031 exchanges, which just allows you to sell and then get into another house without paying taxes. And so I hadn't really looked at it to know what that really meant, but what it really ended up meaning was that we had moved from being kind of in trouble for being able to retire in a reasonable amount of time, being behind the 8 ball, not having a good trajectory for being able to live well when we were going to retire, to having grown our wealth to being over the 90th percentile for people of our age. And so we successfully retired last January on the same day together, which was really, really exciting.
Yeah, super exciting. And I can't imagine, what you were going through. Actually, I can, because I can kind of, relate to that. And, mine was in 2000, right during the tech bubble, that I became disillusioned with the market and everything. But it really takes a lot of courage to make that shift. Because, you pointed out something that I think a lot of people struggle with, which is, really going against the grain. I mean, we are, pack animals, right? We always kind of follow the herd, and the advice is to put everything in your 401k. But you and Kevin really had enough courage to, transition from that and invest in real estate. What was going through your mind at the time? And, did you think, did you have a goal, or was there something like really pushing you to help you get through that? And then, was it more of an incremental play, or you purchased all those 8 homes kind of at once?
So the thing that kind of got us started, I remember when we first met with this coaching group, that I said to my husband, Kevin, I want to just really lay out our financial picture. I don't want to really hold back. I want to just tell him exactly where we are and what we have available, because they kind of did a back of the napkin game plan to show you kind of what you could do over time with single family homes. And so when I saw that and I understood what that could potentially look like, we decided to go in. And so in this case, we had to pay to get in with the group. So that was the first hurdle. But then they gave us a coach. And the coach was just really no nonsense, non-emotional, and just walked us through steps, And so I think that that's really what gave me the courage, was just his unemotional, straightforward advice. And then they did a lot of training. So I understood how we could do it safely. I understood what the markets were. I actually understood the investment much better than I understood stocks and bonds. I never understood what made a market go up or down. And I certainly understood that I couldn't control it whatsoever. And so I was at the whim of a public market, but I could understand going into neighborhoods where people had lost their homes and these houses were sitting vacant. I could understand how I could go in and repair a home and make it a safe, valuable place for a person to live, and how that creates value and changes neighborhoods and changes, the lives of the people who can live there safely and then could also change our life. I got that part I could really wrap my head around and understand. And then just with some training, I understood how to put money aside for emergencies or for vacancies or for home repairs. I learned about how I could start to move forward once we had some equity growth and some other things. We happened to be able to purchase in neighborhoods where so many houses had owners had lost their houses that the values were very, very low against what they had sold it at previously. So I also understood that we were buying in a very safe price position, and that we would have quite a bit of upside potentially over time, which is what ended up happening. And it was really my coach who kind of helped me through. And I was still working. I was very busy. My husband was still working. And so it was really something that we could do passively, not fully passively, but mostly passively, where maybe 5 to 10 hours a month, we could work on our real estate. And through property managers and all of our other real estate team, our insurance agents and our mortgage brokers and everybody helped us to accomplish those goals. And so that's what really gave me the confidence is, somebody holding my hand and kind of walking us through. And then I just was really good at getting all the steps done to make sure that we were on top of it and that we were doing the right accounting and that we were, filing our taxes properly and those kinds of things. So that was where my superpower was in project management.
Yeah, that's one of Warren Buffett's top investing rules, right? Is don't invest in something you don't understand, right? And I think for people investing in real estate or also some tangible assets, it's so much easier in my mind to really understand, like you say, you can walk into a neighborhood, you can physically see the asset, you can look at data around how the market is doing, you can look at comp statistics. There's lots of data, and it's not, moving too fast, right? So you can take all those things and then make an educated decision, unlike, a stock, for instance, right? Something can happen in Asia that impacts the entire position and you're down 5% in one day, right? And that's, to me, that seems, it's very hard to explain that, right?
Yeah. And what was interesting is that, when you first start your 401k at your company, as a 25-year-old, you check a couple of boxes that you don't understand, saying, this is how I want my money allocated. And then you turn it over to somebody else and you're automating it, right? And it was really after I got in relationship with my money, where we were actively managing it through this portfolio of houses, that our wealth really took off. And so we were making decisions every single day. And, often we could put it on the back burner, but we were actively involved in our money. And so, we were moving forward. We had aging parents. Our mortality was sort of at us. We had, beautiful children who were having grandchildren. And we just knew we wanted to be able to spend our lives in as full a way as we could as we moved into our 60s. And so we started looking for ways to convert sort of our portfolio into a more active contributor to our income for monthly support. And I, was thrilled to be able to find out that we had enough income that we could pay for not only our basic expenses, but pay for our lifestyle expenses. And then I came to realize that on top of that, we're going to have money that we're going to be able to grow into the future for, the next 20 to 30 years, God willing, for our lives. That will really turn into something substantial for our family and our generations to come. And we're just incredibly blessed. We feel so grateful that we took those steps to move forward. And one of the things that's really interesting to me is I listen to just boatload of podcasts. That's how I really educated myself around passive investing. And I probably, since we started the house, has put in 7,000 to 10,000 hours of study and research and active work myself. So I'm definitely not a bystander in this, but I listened to a retirement podcast, and people send in their profile, their ages, their resources, when they want to retire, what their budgets are going to be. And then they spitball kind of what a result will be. And often it'll be, oh, you're going to have to work a few more years, or you're going to have to save more money, or, looking at a 3% distribution, or maybe a max 4% distribution, this is what your situation is going to be. But if somebody calls in and they say, this is what I have these streams of income. I have a pension. I have dividends. I have rental income. I have these investments that are giving me this monthly cash flow. They could have the identical dollar amount as another person who's more in the public markets, but they'll say, you're killing it. You're doing fantastic. You're in a great situation. Your money's going to last you, Monte Carlo simulation. You are going to be amazing. You're going to have a fantastic result here. And so to me, that's my philosophy, is like, it's just one of like curiosity and interest, like what's possible if we've done this in 10 years, what else can we do? And how can we help other people who are doing the same journey? So I love being in community and working with other people, because we are really, really, really blessed with what we've been able to do.
Yeah, it's such an inspirational journey that you had, Andrea. And I just love how you've just really pulled up your sleeves and really dug right in, right, from that initial moment, and then just to make progress. And I think that's so great for people to see, because a lot of people might be earlier on in their journey, and they see the promise. Maybe they're educating themselves about passive investing, but they're not quite there yet, or they have maybe a couple of different syndications, let's say, under their belt. But they're really not, at the point that you are. So it's really great to, see that all kind of coming together and really have that snowball effect, right? With multiple streams of income, you have the tax efficiency. And one scenario that I love to paint the picture for people, and again, when I was struggling in my journey with traditional financial planning and kind of going against the grain, right, is if you take that initial scenario, so let's just take a hypothetical example of you reach retirement age at 65 and you have $4 million, right, in your portfolio. Well, with the Monte Carlo simulation, they will advise you to then take out 4%, which it's actually less nowadays, but let's just go with 4%, a year. So that's 160,000. You've amassed 4 million and you're taking out 160K, but that's before taxes and fees and inflation. So in reality, it's probably much more like 110K that you're actually living on. And so you probably wouldn't have thought that getting up to 4 million is only going to yield you 110K, right? And if you now compare that scenario with something like you have done, which is, we're going to use the same numbers here to be equivalent, to say 4 million in real estate and other assets that are tax efficient, producing income, and let's use an average 8% cash flow return. That same 4 million will yield you at 8%, 320,000. So it's double the amount of the other one. And ideally, right, it's completely tax-free money, right, because you've structured it properly. But the biggest kicker is that money just continues to grow over time, right? Your assets are still, that 4 million is still appreciating. Whereas in the traditional model, they're telling you to take out 4% every year. So you literally kill your golden goose.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah, I mean, that's how I look at it too. Philosophically,
Yeah.
that's why I love the kind of investing that we do, not in public markets, but in private markets. And there are a lot of laws that I didn't know were in play that were happening around the time that we started buying houses. But when the Jobs Act was created, then just a public investor like me could start to move into some of these private developments and purchases like apartment complexes and others. You didn't have to have a personal relationship or be an institution like a bank or an insurance company or a retirement plan to get into these kinds of deals, which is really where a lot of it had been reserved in the past. And so as I started building my single family portfolio, then all of a sudden we became what's considered an accredited investor, or kind of a sophisticated investor, just by virtue of the amount of the portfolio. And then all of a sudden now, all kinds of opportunities are available to us that would not have been available to us even like 15 years ago. And so that's another thing that that's why I think my story is maybe helpful to people who were like me. I mean, we were just sort of like middle of the road, middle class. We were not corporate executives making exorbitant salaries. We were making okay salaries and just, kind of getting through. And so now, I just think the sky's the limit. I think we have to, be smart. We have to make sure we're allocating our money in a prudent way and that we feel comfortable with the kinds of investments. But part of what it is I've really taken responsibility for kind of what our family's financial picture looks like. My husband's definitely right in the mix of it now that he's been retired. But I go to tax and legal conferences. I'm in your mastermind so that I can work with a light group of people, that we can work through issues together and enjoy the wisdom of the group. I do a lot of work that way. I network a lot, partly because, you want to be ready for what that next investment is. You want to know what your options and potential issues are. You want to know what the tax ramifications are of this particular investment versus that one, about what happens inside your IRA or your Roth versus what happens outside. And so I'm actually a lifelong learner. I'm very avid that way. So I'm actually having a ball doing it. It's really fun.
What do you think led you to your mindset transformation over the years?
Curiosity is one trait that I would say is really important. Transitions have always been really interesting to me, even good or like maybe not so good of a transition. It always means that something is around the corner. And so instead of being upset about a good or a bad transition, I just opened my mind with curiosity. Like, I'm super curious. What's the next thing? What's going to happen next? And honestly, the houses was one of those transitions that ended up happening. And it was so much better than I could ever have imagined. And so I think that because I'm an avid learner and I needed, I think it came at a time when my kids were moving out of the house. They had grown up and moved out. It just opened up some intellectual space in my head. I wasn't actively raising children anymore. And so I needed something new. I needed a new way to grow and learn. And so that's probably, as much as anything, the thing that pushed me down the path. And then, but because I was with a group who I felt was expert in helping us to do single family homes, like that felt comfortable. It was scarier moving into passive income because I didn't have a coach. I had never done it. I didn't know exactly where to start. I didn't know what my resources were. There was a lot to learn. There was a big hurdle to get over. And so that actually, in a lot of ways, was harder because there was just, I had less expertise at the time. I'm feeling more comfortable with it now, but that was harder. But I knew that was the thing that was going to let us really escalate what we were up to.
And what would you say is the difference in your mindset between today and 15 years ago?
Confidence is one. I really feel like both my husband and I have developed not only expertise, I feel like I have a lot of expertise in understanding the single family home investment. But now I feel a lot more confident in passive investments and well. But the wisdom that comes with the experience, the highs and the lows, the good, the bad, because there's a lot of good and bad that can happen with single family homes. Knowing that your resilience level and getting through it. And then also I can just understand sort of the 360 picture and what the potential is. And to me, knowing what the potential is, if we make good decisions, is awe-inspiring to me. And that motivates me a lot in terms of making the very most out of this, good situation that we're in.
Yeah, for sure. And how much would you think mindset plays a role in investing?
Well, in a lot of ways, it's probably everything. I mean, you have to have resources, but you may not have all of the resources. So the first thing that you've got to decide is I'm going to do this, and I'm going to do whatever it takes productivity wise in order for me to start to acquire the resources that I need to invest. And then I'm also going, and again, like I said, you have to be in relationship with your money. Nobody else is going to do this for you. And so you have to do homework, and you have to understand how these investments work, and you have to start to get comfortable with financial language that you haven't been comfortable with before, and feel like you can do those. But there are resources out there, and you're coaching. I've just started a very small boutique practice where I'm going to start coaching people on passive income and wealth development. And there are people out there who can help shortcut this for you and make it so that it's possible for you to feel more comfortable with it. And then you have to be an action taker. You actually have to make good on the work that you're doing. So you have to decide that you're going to do it. I think you need to be in community. You have to be in relationship with other people who are doing it. And I've heard you say many times is that your wealth is in direct relationship to your relationships. And it's because that's how you find deal flow. Stuff starts to come to you. You start listening. You get invited to different sponsors' Q1 video reports, or you just start to see and hear things that you didn't see and hear before. And that's what really helps you to be in the game, and then to know when to take action and what's the right one for you to take. And it's interesting, you can listen to 10 or 15 and all of a sudden you hear the one and you say, that's the one that fits what I'm up to right now. And so I really do think it's making a decision, getting in relationship, taking steps every single day, start acting, saving money, being more productive, getting like a better job or a side hustle or something like that. And then setting yourself up so that you can start to make those investments and then crack them and make another investment.
Yeah, absolutely. It's not that knowledge, knowledge is power. It's knowledge plus action is the real power. So that's really great that you've been able to, make those accomplishments along the way. I think too many people sit on the sidelines for too long, and part of the education process is actually taking a step forward, because that's when you really lose. But in our culture, we're all always afraid of failure, right? So not every investment goes perfectly. There's always some risk involved, but that's true for any asset class. Right. But you're going to learn a lot faster if you can, fail faster. Right. Or just call it an R&D experiment, if you will. Andrea, why don't we go into a little bit of what you're doing now with your portfolio? Because I think that's quite fascinating for people, as well as how you've kind of transitioned some of your single family homes. You're kind of moving into more passive income now. You're focused more on income, also looking at, some of the tax efficiencies around converting some of that income. So can you unpack that for listeners a little bit?
Okay. Well, so at the peak, we had 18 single family houses, and we knew that we needed to change that mix of what we had. My husband's money was in the stock market because he was with a a large defense firm. So we decided to sell off some of our houses. We have 13 now. And with the profits from that, and then we found out that most people think you can't access your 401k when you're still actively working. And I don't know if it was just our age or how close we were to retiring, or if this is a program that other companies do, but there's a thing called an in-service transfer. And we were able to take 50% of his funds and put it into a self-directed 401k. And so we were able to put his money to work before he actually retired into passive investments. So now we have the 13 houses, and now we are also in 13 passive investments. And we had been in one prior to us retiring. And so it's a mix of a wide range of things. We're in 3 multifamily apartment complexes. We have some debt funds. We are in 4 ground up developments, which is exciting. We have a couple of income funds that are generating more monthly income for us. And so it's really a mix, and really with the help of our mastermind, we kind of created an investment philosophy. And with our streams of income, we felt like we could take 1/3 of our portfolio and dedicate it specifically just to our monthly income. So it's for our basic expenses, our lifestyle expenses, and we hope to grow that over time so that we can kind of increase that. And because we're in our go-go years, we want to have as much fun as we can. We're skiers, we bike, we play golf, we travel a lot. We have kids and grandkids that live not just near us, but away. And so we want to really have fun and bring our kids along with us. And then we feel like, though, that we have enough capacity that we can take the other 2/3 of our portfolio and do longer term growth. And so those are in more less accessible, less monthly income kind of investments, but have a higher upside. And we have money both inside qualified retirement plans and outside of qualified retirement plans. And so we're working in those capacities, trying to find the most tax advantaged ways of investing.
Yeah, no, I think it's really great how you've really allocated that capital according to your needs and what you're doing. And I definitely encourage for investors to just think about their overall portfolio allocation and what purpose is it trying to serve, wherever you are in your journey, right? Because people are in different chapters at different times. So, having greater concentration of income, maybe it's a greater concentration of, tax efficiency when you have, W-2 years and different things. But it's important to break that down, because then you can drive more velocity, overall to your entire portfolio. You mentioned the mastermind a bit, Andrea, and, appreciate if you can share just any additional thoughts on how the Pantheon Mastermind has given you insights, maybe created relationships, or any opportunities that you've identified through being a member?
Well, I think that just as I had a coach to help us start our single family home portfolio, which gave me a level of confidence to move forward. And so, I mean, if my coach called me and said, here's a potential move that you should consider, I could take it seriously, and I could believe in their level of expertise in helping me to move forward. And I know you and I had an early conversation when I was first starting, and I said, I'm looking for a mastermind because I don't know how to do this by myself. This is so new to me. And so I think it shortcuts the learning curve a little bit to be in a mastermind, because you get the wisdom of everybody in the group right away. So you can access what their strategies have been, what kind of investments they're in, what questions they have, who is on the same trajectory path that you are. Like, there's a couple of us in there that are trying to figure out how to convert our 401ks to Roths now, so like we can all talk and compare notes about how we're doing that. when you are in a certain kind of an investment, like say a ground up development is really different than going into, say a real estate fund that just pays you on a monthly basis. Like those might be things that people can talk through. What are the pluses and minuses? Where have you seen, problems or challenges? How have you found these sponsors? And so, and then also, we have deal flow, which is really cool. You guys put together some really amazing opportunities, and then we can look at it as a group or even individually, but like in conversations saying, how does this fit in my portfolio? What are the pluses and minuses of this? What will this do for me? And for me, it's whether or not it fits in my active income or my long-term growth portfolio, and just trying to look through that balance of it. And then, you find out that you have wisdom to share. You don't really think you do, but then it just turns out that by your own lived experience, the ups and downs that you've already gone through, you have wisdom to share that's really going to change somebody else's trajectory as well. And so it's that interchange is really fun, really exciting.
Really great insights. Appreciate it, Andrea. If you could give listeners just one piece of advice about how they could accelerate their own wealth trajectory, what would it be?
I think I've said it before, but to me, it is about taking charge of your own financial situation, taking it out of the hands of a public market advisor and really being in relationship with your money, really thinking through what your goals are, what are the best ways for you to move forward, how are you going to actually reach your goals, how are you going to look at your current financial picture, and then how does that fit in your family goals and where do they come in? I do want to just say that we've involved our adult daughters to now become advisors in our company because we want them to help shape what happens over the next 20 years because it's going to be a big thing and they're going to have to take it over. So there's more complications in this, but the potential is so much, to me, so much greater. And then surround yourself with an expert team. As we talk about, we have our own, you have to have sort of a quote unquote, a family office. I mean, we have asset protection and we have insurance and we have, estate planning and we have a CPA that's also kind of acting as our CFO. And now I feel like our mastermind is sort of our way of looking at investment advisory, et cetera. So we're surrounding ourselves with people who can be on our team to help us succeed.
Yeah, that's just so powerful, Andrea. So many pearls of wisdom in there. Really appreciate you sharing that with the audience today. Really appreciate your time as well. If people would like to connect with you, maybe they have any questions or anything, is there a good place to connect?
Sure. I'm on LinkedIn. It's Andrea H. Barnes. And I would, be happy to speak with people. And if I can provide any wisdom to people, I'd be happy to.
Awesome. Thanks so much, Andrea. Really appreciate it.
Okay. Thank you so much.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.